Hey, I'd like to welcome you to another episode of Money Matters Top Tips for Success, where each and every day I bring on new business owners, entrepreneurs, and executives and have them share their top tips for success with you. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres to keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, moneymatterstoptips.com, and click on Become an Author to apply. All right, so today I have Jon Laolagi on the line, and he is the VP of Sales over at Swiftsure Loan Services. Jon, welcome to the show.
Thank you, Adam. Great to be here, brother.
So I'm excited to get more into what you're doing over at Swiftsure Loan Services and how you're helping your clients. But before we do that, let's get a little bit further into your background. So how did you get started in your career and in business?
You know, Adam, it's sort of like a lot of folks, life is about what happens to you on the way to doing something else. And so back in the early 90s, in 1991, actually, I did a career change. I was an entrepreneur for most of my 20s, and I decided I needed a change. I was getting remarried, and so I decided to become a realtor. And so I went, and in California, you have to get a realtor's license to be a realtor. So I was getting through the exams, and then Chapter 11 came up. And in Chapter 11, they teach you about money, about loans, about escrow, about all that works. And I knew immediately when I started studying that chapter that I no longer really wanted to show houses and sell real estate. I wanted to sell money. And so I moved down to San Diego, and I held my license, and I just got lucky, Adam. As you might recall, in 1991, 92, was that first sort of Clinton Greenspan refi wave when the rates went down. And so my first year in business, I was literally getting 20 loans, turning upside down, redoing them again. We had 80 radio ads rolling. And so the first 2 years, it was incredible. And then we hit sort of in 1994, 1995, the rates went back up again. It became more of a purchase market. And so I became more of a sort of an overall rep that way. That's how I got into the actual business itself. I got into the wholesale channel in 2003. And I'd moved up to Oregon in 2003 in Beaverton. I was looking for a gig, and someone said, try the wholesale side. And I always thought, to be honest with you, I thought that, the guys that could did, and the guys that couldn't did wholesale, right? So, but I came across, and boy, I've loved it. It's my niche. It's more of B2B sort of a play. And so that's sort of the origin. That's the genesis of how I got into our business.
Wow, what a great story! And I mean, one of the things I like is that you've seen multiple sides of the market in terms of money. But number one, number two, you've been doing it so long, and you've been through multiple market cycles, so you have a different vantage point than most in the industry. So that being said, there's some younger entrepreneurs or let's just say some fresh college grads that are out there and they're thinking about going that money route in terms of lending, whether it be on wholesale, retail, either of the sides. What kind of advice would you give to that newbie that's out there considering creating a career out of the business like you have?
Okay, so I'll tell you, this is going to come from my personal perspective. There may be others out there because our market, as you know, is changing. It's changing even as you and I speak. It's becoming more, I call it bifurcated. You have, sort of I call them the conveyor belts, but these are good companies. These are UWM, Quick, and these are guys that are doing Rocket Mortgage. They use technology and they use scale to create a platform that's really difficult to compete against if you're not them in terms of that space. And so there are opportunities, Adam, available in that space. That's not sort of how I'm built. When I was a retail loan officer, a guy named Elon Auerbach from Quality Mortgage came in. He started showing me these subprime loans, and and it has obviously a pejorative feeling to it now. But as I got into my career, I realized I was more sensitive to folks that had needs, pulling thorn out of people's paws. And so for me, I see the opportunities in that personal human connection, the ability to have an arsenal of weaponry that can take the out of the ordinary loan, the out of the ordinary situation, whether it be lower FICOs, income challenged, ratios, property types, whatever it might be. I find the opportunity for someone coming in to really, really school themselves and be the guy that can do the unexpected thing. And I believe as the market becomes more bifurcated and you have these sort of cookie cutter conveyor belts glomming that business, to be an expert on the stuff that's hard to do for those guys, to me, is the niche that I want to pursue. And anybody I would be talking to, I would have the same advice for them.
Man, that's great advice, and it makes perfect sense. I mean, because really, as all of these, not just in loans, but in financial advisors are going through the same thing. So as you get more and more technology integrated, and things are becoming more conveyor belt. For some things, they're getting more efficient. For others, they're getting worse. So you have to kind of think about how to add additional value. I love your story there, Jon, and which is a good transition too. Let's get into what you're doing over at Swiftsure Loan Services. So first, tell me a little bit more about the business, please.
Okay, Swiftsure Loan Services has been around for about 2.5 years, owned by a couple of gentlemen. One of his name is Ben Cheek. Ben Cheek is the CEO, and he was the old national underwriting manager for Impact. And I hail from a company called The Money Source. I was there for 5.5 years. We had sort of started the wholesale platform there. And Ben was my underwriting manager while we were over there. And Ben was very frustrated towards the end of his tenure there because TMS was getting narrower and narrower in terms of their bandwidth. They were looking for that cookie cutter type of business. And so he rolled out about 2.5 years ago his own platform. And the ideology was very similar to what I told you earlier in my story, Adam, which is he wanted to serve the underserved, those folks out there that needed a champion, those folks that needed someone to be more aggressive and look at the guidelines in a way that was helpful for them. And so he went across and he had moved me for a little while after TMS hung up their wholesale channel back in earlier this year. I'd gone elsewhere for a second. We kept talking in the background, and so now I joined him about a month and a half ago. And again, it's consistent with my story. The platform there is never going to be one of those huge cookie cutter conveyor belt type of deals. What we are is the boutique lender. We have a few things. Number one, we do a lot of agency fallout there, which basically is a fancy way of saying if your file doesn't make it through one of those larger companies because there's a guideline interpretation and an overlay, we're very aggressive. We're very helpful in terms of taking that file and staying in the agency arena. Many times the loan officer, not knowing that that's available, may go directly to a non-QM place, which is not a bad place to go, but the rates aren't quite as good, and also the loan to values and there's other program parameters aren't quite as beneficial to the customer. And so the idea of taking an agency loan that's a little bit has a little bit of hair on it and making it pretty and sellable is something we do really well at Swiftsure. We also have a loan program that I'm really excited about. It's our written VOE only program. And I know a lot of lenders have those, but they usually cap it like 80%, and they usually have portfolio pricing. But we really have a situation set up there where it goes to 95% conventional, 96.5% FHA, 100% VA, and we literally use a written VOE only for the income documentation. And the reason that's important is I think technology and so the way the millennials are being raised right now is less is more, and it's very evasive to have to deliver documents to loan officers, and any LO out there will tell you that's the truth. And so the idea of not having to find your pay stubs, your W-2s, making it a more seamless transaction has really been really beneficial. And then the last piece I'm going to tell you is that because of the fact that we're not one of those big behemoths, we're very personal. And so, and that really fits my style. I'm very file-centric. I'm very customer-centric. And so everybody in the company is very aligned with that sort of theology. And so you're going to find it's sort of old school. You're going to find out that it's a relationship-driven business model. So that's what we're doing over at Swiftsure.
That's awesome. Are there any kind of trends from your vantage point that you care to comment on in the industry overall?
Trends. Well, I did see the trend I outlined earlier, and that's the trend that I think fintech, and as you said earlier, and I like how you sort of balanced me out a little bit, fintech brings a lot of promise. It brings a lot of value to our business in terms of efficiencies, in terms of scale. And I think the trend that I'm seeing is that successful loan officers are, they're making sure they're not ignoring fintech, because, a lot of loan officers make their living off their book of business, and if they're not careful, large fintech companies can come through their funnels and sort of siphon that business off. And so I think what the good LOs, what I'm seeing out there, the trend, Adam, is they're using fintech, they're using technology, they're using scale to be able to empower them to be able to service their books of business better, And so I think it's really, really important these days that you can't just be a loan officer these days and just know DTI ratios and your account executive's phone number. You really, really have to know the industry. You have to know the market trends. You have to be able to look at your borrower and talk about the idea that you're really his financial quarterback. And so when you're looking at a transaction today, many LOs in the past would only look at today's transaction. But I think it's important, and I heard Barry, if you talk about this, that when you're sitting with your customer today, you better be looking at his subsequent transactions as well, because if you're not, somebody else will be down the road. So I think that the trend, to answer your question, the trend I'm seeing is that LOs, in order to create a value add in this day and age of fintech, in this day and age of larger corporations with their technology and their funnels, need to be really, really market savvy and really, really product savvy in terms of being able to offer products to their customers.
That's awesome. So if somebody's listening to this, Jon, and they want more information on Swiftsure Loan Services, what's the best way for them to reach out?
Like I said, I'm old school, Adam, so I'm going to give you my phone number. I'm 503-990-3548. I'll repeat that, 503-990-3548. We have a website, of course, www.swiftsureloans.com. But nothing like a good old-fashioned phone call. Pick up the phone, give me a buzz. I'd love to chat with you.
I love it. Great stuff, Jon. And hey, I really appreciate you coming on the show. And to the audience, I appreciate you tuning in. Don't forget to subscribe to the podcast. I hope you got a lot of value out of this. Leave me a review. Do all those great things we do to support our podcasters. I really do appreciate it. And Jon, thanks again for coming on.